Are we at 93.38? Yeah, exactly. That's what we're going to trade to. That's our first target right there, Hugh. Our first target is down at 93.38, and then a break of there to the 270 fib, and then eventually to the 618 fib. That's what we're looking for. It went up to, notice it. Here's the deal. They went up and they kept the channel in place. Where did they turn? At the 50% fib. See? That's a selling sign right there, for sure. Right. Yeah, we've got plenty of room to move our stop to the double bottom right here, and then a break hook and go here would double our position. See that? See how the chart tells you exactly how to trade it? The target's not massive, no, but it is 1, 2, 3 T30s away. All right, so there's 3 T30s and this, so it's 110 pips. It's not bad. So I'm interested, very interested. So we'll see. I'm interested enough to be in it. Yeah, you got to look at the much bigger picture. And you can see that this CAD yen can get up and rock and roll. Once it decides to go, it can just, the personality says, we can go, we can go, we can go, we can go, we can go. Yeah. The personality of the currency says, we're probably easily going to make that channel bottom today. See that? So that means that this is the place we move our stop, but this is really probably the overall target for this morning. Yeah. And you know, that's a process, Catherine and Hugh. It's a process of spending more time up in the 240 and the 60 charts than you do on the little charts. Right? We don't want to be down spending any time at all on the little chart except for that. Okay. No, that's a good sign. Keep going. Keep pushing. Keep going. Got a white dot showing up here in the 60. That's not good. But down here in the 10. White dot as the money came in right there. Let's mark the 55 pip target from there. 55 pips from this. Sell. There's 55 pips there from the white dot. Now, anytime this shows up in session, this is a big boy. A big boy has pushed money into the market to try to get it to go. All right. Whether it goes or not, we don't know. So they put money in over here, trying to get it to break through here early, and it didn't do it. So what do? They built a bear flag. Is a bear flag a sell sign? Yes or no? That's a sell sign, all right? We're in a downtrend. We got a down channel that we're working. We got a white dot that showed up as the big boy put the money in with a 55 pick target down here, all right? We got a bear flag break. We've had a break, hook, and now we're in the go part of this S5. Do you have any things that are telling you that this is a trade you should be looking for? All that structure that tells you the trade is probably going to happen, see? And that's how you pick higher probability trades. Get the preponderance of evidence to tell you that that's what it's going to do. If you don't have a preponderance of evidence, you stay out of the chart. Yeah, but it might go. Well, yeah, anything might go. Anything can go. Anything can also stop. All right, so we want lots and lots of information telling us we're going to make this move. See? All right, we're at the 1030 bump, so we can now see if she'll rock and roll. Options have expired at 10:30, and now let's see. Look at the money peppering in. See how the money starts peppering in? So the option contracts go away. Technically on the green candle, on the white candle, you mean the white dot right here? All right. So they're trying to move this to the downside. All right, you can see they're trying to move it to the downside. There they got it going. All right. They're in a channel. They're in an uptrend. Okay. They ran out of sellers here. See, when they broke the barrier here, they ran out of sellers. See that? Ran out of sellers. So what do they got to do? They got to go find the sellers. Where do they go find the sellers? Up at the top. How do they do that? They build a bear flag. The reason they build a bear flag, between the white dot. The white dot is an arrow and painted candle like this, an arrow and painted candle on a 60-minute chart. It's money coming in. It's a pop of the money coming in. And who enters on the 60-minute chart? Bryce? Big boys. The big boys do it. All right. So when we see them enter, right, we know that we know that they're entering for a reason. They're not they're pros at this. They make money day in and day out. The pros come in to make a short, Will it happen? They don't know. They still got to get follow through. All right? They don't know if it'll happen, but they've ascertained that this is a good risk for reward trade. Well, you have to look and see what you're looking for here. All right? Why did they pop back up? All right? Why did they pop back up, and what was the time of day? All right? It's 3 o'clock in the morning. All right? 3 o'clock in the morning. They don't have enough sellers to take this bottom out. Everybody see that? There's not enough sellers to take the bottom out. So what do? A big boy pops money in to get it up to the top where they can get the sellers interested in making the trade. They got it up to the top. Sellers came in. See? Professional sellers sell at the top. They don't sell at the bottom. All right? That's why we have to wait for a break and a hook and a go, because we want to sell at the top. See? We don't want to sell at the bottom. We want to sell at the top. The bottom's here. The top's up here. We'll sell at the top. See? Would provide only for trades from the top to the bottom of the wave. Let's go look at the 240 and see what it looks like. All right? So here's the problem with this one here. It's hard to find out where the wave is. All right? So it looks like this is 1, 2, 3, and then we'll have a 4 and a 5. The white dot on the 60 means nothing. It's designed for the 10-minute chart. It's designed for us to be on a 10-minute chart, seeing the big boys come in on a 10, on the 60. Yeah. Well, that's too. I don't even look at the waves on a 10. I don't care about those. Right. Down here, there are waves and waves, yeah, but the bigger structure takes over. We're going to trade the big boys. What are the big boys looking at? White dot is on the 10 is in session, right, Dick? In session. You see, what was happening here is it is an arrow and a painted candle, but what has happened when you get an arrow and a painted candle on a 60-minute chart? All right, Jerry designed the charts to look back at the candles before, 6 to 8 candles. I don't remember how many it is. Okay. Now, if he looks back 6 to 8 candles, all right, and he's measuring how fast and how fast the candles are being built on 6 to 8 candles, and all of a sudden a white dot shows up or money comes in, and on this candle there's more money coming in on any of the 6 to 8 candles back here. You see that? Now, what is 6 to 8 candles? That's a whole session and then some. See, session's 3 hours. That's 2 sessions. It's looking back, and there's more money coming in this candle than in 2 sessions. See. What does that mean? That means the big boys are showing up because they're the only ones who can print candles. See, so that's why they're important to us. Right? It shows us that the money comes in. See, the money is coming in, more money than the last 6 or 8 candles. Does that mean anything? It may not. It may not mean anything. But that's the problem when you get in the afternoon. So if you get in the afternoon and you close the New York session, you close down about 11 o'clock, and the next session is the Asian market at 8 o'clock at night, okay? So you got 9 hours in here, and during this 9 hours, the market goes sideways, okay? So all of a sudden, some big boy executes a trade for Sony in Japan and buys $1 billion worth of yen, all right? That pops this candle up with a white dot on it. Does it mean anything there? No, it means nothing. Because going back 6 to 8 candles in the off market, that means very little at all. See? So in between the markets, we don't care what this thing does. But once the market starts, now we're looking back on this area here. And once the market starts, if we have to see the white dot come in, we see the money coming in greater than all of this in here. See? Does that make sense to everybody? There's no way to tell volume. You can't tell volume in the Forex. So how do you have to do it? You have to find a way to do it. Right? And that's how we found the way to do it. I shouldn't say we, Jerry did. So, and then now we see how accurate they can be. All right? In session, they're very accurate. They also tell us a lot of information. All right? What are they trying to do? That's our whole job, is to figure out what are they trying to do. So look at this down move here. What do you see? All right? We got 1, 2, 3, 4, 5 waves to the downside. Money coming in, money coming in, money coming in to finish it off. Can you see that? 1, 2, 3 on a 5 wave down here in a 10-minute position. See, they wanted to continue the move to the target. See, it's very simple to see now. And you go, yeah, I can see the big boys were really trying to push it down. They wanted to keep this thing intact. And what did it end up be? A channel to the downside. Can everybody see the channel? Absolutely see the channel. Now they hit the bottom down here. So what do we got to do? Professional sellers will not sell at the bottom. So what do we got to do? We got to drive it back up. See? Anybody see it? It's right there. That's why you'll have to learn to read charts. All right? Now we're coming to the downside. All right? Yeah, put some fibs on. Went up to the 618 fib, and that's where they found it. They first found it. See where they first found the buyers, the sellers? The first sellers showed up here on the 50%. Why? Because that's where they, if it goes, they want to be in it. But there's stops up here, so that's not a problem. All right, so our CJ's on. Doing pretty good on it right now. All right, working good. Pound CAD. I mean, pound chief. We don't trade the pound CAD. Doing well. Pushing through. All right. Remember, at 50 we go to break even. So we got 7 pips to go to break even, folks. Yeah. Who is Lorraine? I don't know who Lorraine. We have Lauren here, but not Lorraine. I don't think we have a Lorraine. Oh, the rain is gone. I see. The rain is gone. I'm with you now, you. All right, come on, baby. Let's go. Keep going. All right. So what else is eminent? That was the most eminent one. See, when we went through all the currencies, we found that this was the place. All right, below 91.50, 93.50, we double our position. Our target, first target is the 93.14. Next target is the 92.81. That'll be the bottom. 92.81 is the target. You can see the trend is going to intersect with the 618 fib extension. So, see, we always, if you end up always trading a wide open space, you'll always have the ability to double your position, which is one of the keys to trading. You got to be right big and you got to be wrong small. All right, so you can't be right big unless you press your winners. Let's go look at it. See. So it should take that 50 out pretty easily. All right. Takes the 50 out easily, and then when it pulls back up to it, then we double again. Wide open spaces, right? That's right, Lou. That's why the trade should work. That puts the opportunity on our side. See. You use the second lot is whatever. That's a great question, Tom. The second lot is whatever the real estate tells you, all right? But you leave the first one alone. But the second one is still there at that. And then once it gets going and breaks, and you get the thrust to the downside, then you move all your stops to where that break even is on the first one. Good question, Tom. By the way, everybody understand that? So you got to stop right above here right now. When it hits to 50, you move your stop to break even, wherever you get that at. I got it at 72, so I'm okay. Got it at 72, so at 50, I have 22 pips, all right? So I move my stop to break even, and when I take this trade right here, my stop would have to be whatever the real estate is, probably here on the second strike. But as soon as I get the down thrust here, I'm going to move all the stops down above the 50 and just hold. And I'll move it again once I get to the 55 pip part, because the 55 pips is where they're going to take half of their position off on the white dot. They're going to take half the position off and put it in the bank, and then they're going to take their trade and put it to break even. And they're going to sit on it for the whole move. Right? They're not going to be in a hurry. They're not moving their stop. Right? I'm trading without a stop right now. They don't even have a stop. Make sure. Well, you're gonna need to have something like boot camp or something like that in there, Lou. I run my other computer is a Mac Pro, and I have a boot camp on it. So I'm running charts and everything on boot camp. All right. So You know, the best thing to do is get a gaming computer, something that's set up for a game. Then you have video cards, and you got speed, and you got RAM, and you got all the things you need. So if you're looking to buy a computer, buy one that's set up to do gaming. Yeah, lots of RAM. Because you're pushing lots and lots here, and the more currencies you put on, the more RAM it's using. It needs lots of memory. Right? So. Yeah, see, if you buy a Mac, I mean, I love the Mac except for the fact that I can't use the Mac portion of it. It doesn't matter if it's set up for gaming, you know. Or if you have a local computer shop, have them make you one. It's almost always cheaper. And then you can tell them what you're trying to do, and they'll be able to go, okay, well then we'll put this in here. Yeah, you want dual core at least, you know. All right, so she's pushing on through, looking good right now. Yeah, there you go. Rick did his, made his own. All right. Yeah, there you go, Matt. All right, gonna hit the 51, hit 50 pretty quick here, so move your stop. Okay, stops moved. So, yeah, exactly right, Tom. All right, so the trade's looking good right now. All right, stop the break even at 50, yeah. All right, now when it pushes through the 50, which it's doing right now, it'll come back to the 50. That's when we double our position. All right. If you got a second one, yeah, exactly right, Dick. Because now, think about that. All right, if you got a second one, then that second dot is putting more money in than this is doing right here. See, you could do that, Hugh. I'm not in a hurry to move my stop here. In fact, the only reason I'm moving my stop is for you guys. Normally, I wouldn't even move my stop yet. I'm not interested in trying to protect these 20 pips right now. All right. That's just the difference in where I am and where you guys are. But in your case, you need to protect your margin at all times. So, you know, the worst that can happen is you get a break-even trade if it pounces back up. In my case, I'm here for the whole move. So I'm not, normally I wouldn't even move my stop at all. I'm not trying to protect 20 pips. I'm never here for 20 pips. I'm here for 80. All right? And I want to get stopped out. And when I journaled my trades, and I early on found out, hey, you know, I'm moving my stop too quick. I'm moving my stop too quick. I'm moving my stop too quick. Guess what? I was moving my stop too quick. My journal told me that. So what did I have to do? I had to work on it. The way to do that is not move your stop too quick. It's a conscious mental effort that you have to do that. But new traders need break-evens. If it doesn't go because they don't have their head on yet, the psychology in there, and they get freaked out about losses. See. Yeah, well, but Hugh, there was a time in your life when 20 pips would have been the greatest trade in your life, right? You go, oh my gosh, I got 20 pips. Now you're going, okay, 20 pips. See, you're moving forward too, Hugh. See, moving forward is the name of the game. Now, notice, do you think the 93.50 was a problem? Of course, it was a problem. See. There's a problem. It's all even numbers. That's why we don't trade in an even number unless we can move our stop, because that thing could bounce all the way straight back up. If it bounces straight back up, it's going to be a break-even trade. That's good. That's not a loss. See? Not a loss. Push down to 46. So we've got a wick here, so we can watch for the break hook and go. Once you get a wick like this, you can go watch for the break hook and go on down here on a 3-minute chart. So now down the 3-minute chart, it takes 3 candles to do a break hook and go. Break down is one, hook is another, and go is another. So it's 3 candles. That means it's 3 3-minute candles would be inside the 10-minute candle. That's why we can do that. Yeah, there you go, Matt. Exactly correct. There you go, Robin. That's a good point. Robin's been trading with us for a long time, so Robin takes partial profit quite often. Robin watches that T3 like a hawk. So I use FXDD, Brian. All right, so now you can see they've centered the candle. All right, remember that? Before you enter, let it center. Did they center the candle? Absolutely. Now we're looking for the go to break to the downside. If they break and go, you go. That's where you put your next position in. Double your position. And you can see they're still pushing to the downside. That wick tells you they're pushing to the downside. So we're going to wait. This candle will print in another minute. All right, there it is. It's done. All right. Now, if this one starts to go to the downside, when it starts to go to the downside, it's now in the go position. All right. So let's wait and see. If it starts to go, that's where you double your position on the way down to the 93.33. All right, we're going to move our stop it. That's not the target. Remember, that's just the 55 pips from the white dot up there. All right, we're waiting to see the money come back in and push it to the downside. You know they have an agenda, and sooner or later, if the follow-through doesn't do it, the big boy's going to do it. All right. But can everybody see? They may want to come up and square this up. See? They could come all the way up here and square it up. That ends up being a break-even trade for us if that happens. All right? But if they keep going, we double our position. We pull out 55, 80 pips out of this. One trade makes 80 pips. The other one makes 40 pips. And we got a 120 pip trade. And that beats the crap out of 5 to 8. Had to close the door. All right, Rick. Thanks for that post on Facebook, Rick. I did send one northward for you. All right, we're waiting to see the go. That's all. And you got to get out of this mindset that there are tons of trades. There are only 1 or 2 opportunities per session. Our job is to figure out which one of those 2 we're going to take. You can't trade them all. Can't trade them all. You can only trade 1 or 2, especially as newbies. And see, they stalled here. Totally stalled. Now, if they can't find enough sellers to break through here, they're going to go back up, see? Because they got to go find the sellers. Professional sellers are not going to sell at the bottom. Right? You can see the money keeps popping into the downside. They keep popping money to the downside. That means that they're taking orders. Every time that thing pops, that's a big order coming in. A big order. Takes $35 million to move the euro dollar on average in the New York session a half a pip. $35 million to move it a half a pip. So when you start seeing these things pop like that, you're looking at millions of dollars coming in. There it is. All right, see it? There it goes. All right, now we're good to go. Double your position. All right, good to go. Thank you, John Robert. All right. So, notice there's no emotion here. This is all a business decision. All of this is a business decision, folks. We've identified the opportunity. We now are trying to maximize that opportunity. No different than what you did in your business, right? Whatever it was or where you worked. You had to find solutions to problems. You had to figure out what you were doing, and then you had to make a decision on how to execute that. There's no difference here. It's the same thing. But some of the things in business that made you successful will hurt you in the forex. All right, Dick, there you go. Will that work? I don't know if it'll work, Dick. Do I have a clue if it'll work? I don't have a clue. I don't know if it's going to be a winning trade or not. Neither does anybody else when they make trade. That's called trading. That's why everybody can't do it. All right? If everybody could do it, you couldn't get your garbage picked up tomorrow. Why? Because the garbage man would be a forex trader. So not everybody can do it. You know? We'll see what happens. Will it work? I don't know. You know, I'm not clairvoyant. I don't have a crystal ball. I could borrow Bryce's, but he's got a big crack in it, so that doesn't work. El hombre basura. That's right, the garbage man. Well, we can see the currency is showing us we're trying to continue. We're trying to move to that 55 pip target. Stop on the second entry. Going to have to be about 73. 73, Barbara. Remember, our overall target here is not here. These are stall places right here. Our overall target's down here at the 618 in the trend, right here. That's our overall target right there. So this is our potential reward right here. Here's our risk at 73. So there's our risk. There's the reward. But we're going to have to pay attention to this, for that until we get down to here. Everybody see that? Very simple, not hard. What we do. Come on, baby, let's go. And you can see she's pushing. She's pushing to the downside. But remember, if they cannot get enough sellers to get this pushed, they're going to have to go back up to find the sellers. That's always the danger in trading. That's why you got to go break even on the first trade. If you break even on the first trade, the only risk you have now is on the second trade. Well, that's the same you had on the first one. You have no more risk than what you had before. See? You've majored in the side of risk and tried to maximize the reward. That's what trading is all about. Major in the side of risk and maximize the reward when you get the opportunity, knowing full well that you may not get the reward. All right? There's no guarantee this thing's going to go at all. Looks good, big wide open space, ought to do it. But there's no guarantee it's going to do it. If they can't take that 93.50 and keep it going, they're going to have to go back up. Yeah, looks like a fish, smells like a fish, swims like a fish, probably a fish. That's right, Barbara. All right, so they're having trouble pushing through that 50. It's why we always tell you, watch the 50 even numbers and the 00 even numbers. They are, even if there's not an option contract on them, they are psychological numbers. And they always have trouble with those numbers. You can see in the past, what do they do when they hit the 93.50 before? They had to go up and find enough sellers to sell it off and break it. Right there, see? So the 93.50 is a heck of a number. Will it break it? I don't know. They're trying. You see it. They keep popping money in to try to push it to the downside. They keep finding sellers. That's good. Keep finding sellers. We're in a sell. Yeah. So this bottom is going to be a tough thing right here. When we get down to 35, we're going to have to get our second trade to break even and the third one into profit. The first one into profit. Well, if we get down to the 93.35, and we know they're trying to get to here because the white dot shows up, that means it's pushing it down to the 55 pips. All right, and the overall target is down here at the 618. All right, so we now know that if it continues, break, hook, and go here, we double again. Break, hook, and go here, we double again. So there, see? So trade 1, trade 2, trade 3, trade 4. Now, if it does that and you do that, you're going to pull a ton of pips out of this trade. Well over 100 pips, easily. See? So that's what it's all about. Finding that place where that opportunity exists, wait, and that's all about structure, and then wait for the trade to come to you. When it comes, you pounce on it. Become a panther. All right? Pounce on the trade. And you see they're taking the 93.50 out. They've gone down as low as 42. So they've been 8 pips below here. All right? All right, UJ trader, that's going to be very important to you. All right? Later on, it means virtually nothing because you're only ever going to be trading in areas where the spread doesn't really matter. See? I'm looking at this whole picture here. See? So in reality, this is two parts of this trade. The first part is here. The second part is here. I'm looking for that. Where I get in here, it doesn't matter. See, for me, if I'm not trading in here with you guys, my stop is still up here, and I have not moved it at all, because I'm here for the whole trade. I don't want to get stopped out. I don't want it to pull back up, do a bear flag, and pop down and go down. I'm here for the whole trade. So you go in. Yeah, you want to be a sloth. Well, a panther, what a panther does or a cougar does is they sit up in a tree and wait for their opportunity to walk underneath them, like a deer, and then they jump on their neck and kill them. So, 93.44 is S2. Put that HSI on for KW. I like this one right here, this big pull right back here. That's the first one, right there. Notice they're showing it anywhere it is, see? So I like that. Everybody see why I chose this one? Everybody see that big retracement candle right there? Everybody see it? That's why I chose that top for the second HSI. Right. It's all judgment calls, folks. So that was the first major big pullback, and then they went again. So I'm using that top right there. See ya. All right. We're still above this 52 here. Tough. Tough trying to break that 50. So what we're seeing now is some profit taking. There are people who go, it's not going to break the 50, I'll take the trade off. See? That's what some people have done. All right. One of the things you should start looking to do, especially fast track traders, by the way, fast trackers, you need to be executing that email I sent you. All right, don't forget. 2 months up is up. It's up. Time to get on with the program. You need to be looking at that's new fast trackers only. Yeah. Thanks, Lauren. Is that as you progress as a trader, what you want to be doing is more and more be looking for these bigger opportunities, get a trade on, get it to break even, and just walk away. And just walk away. Let it go. Let it flop. Let it do what it needs to do, and just walk away from them. And then when you come back 4 or 6 hours later, look and see where your next opportunity might be. See? And if you can get to break even, the worst that can happen is a break even. See? But if it goes, you might pull 200, 300, 400 pips out in a big move. And since you're only going to trade in a big wide open space, you always have that opportunity. How do we compensate for FX Compass? I don't understand that question, Andrew. Yeah, there's Michael Anthony, okay. What's your best month, Michael Anthony? $4,000. 4,000 pips in a month for Michael Anthony. Oh, well, when you pay for the charts no matter what, and then Compass FX looks at your trades every month, and depending on what level how many trades you do, 1,200 now, yeah, 400 when you weren't working, and 1,200 now, yeah, still 1,200 for October already. Okay, nice job, Michael Anthony. And when did you start with us, Michael Anthony? How long have you been with us? $19 months to 16th. Nice. 19 months. All right. Popping 4,000 pips a month. Gee, I don't know. Yeah, it's the process. You can't learn this in 2 weeks, 3 weeks. You can't do it. Just get that out of your head. But commit to the process. However long it takes. If it takes you 2 months longer than the longest guy had ever took to learn the target trade, it doesn't matter. because now you have a skill you can use for the rest of your life. We wait till the down thrust with you. We wait till we see it thrust into the downside, just like we saw those two candles thrust into the downside. All right? We wait till we see the commitment. All right, there you go, Michael. Your account's grown 66% this year. All right. Put that money in the bank and see if they'll give you 66%. Yeah, it just reimburses the account, you know, whatever you done. Wow, nice job, Steve. There you go. No, it doesn't risk a reward like that. Exactly right, Sheree. Can you get 1% in a CD? Exactly. All right, see the exhaustion wick showing up? That means that they found some sellers. All right. Everybody should be able to see that. They found sellers right there on the exhaustion wick. Take it to a 3-minute chart and you'll see them. There they are, see? Little pullback. All right, now maybe we're going to go. There you go. See, there's the thrust as they continue the movement. All right. Now, once we take this bottom out at 42, below 42, that's when you move your stop. Where are you going to move your stop on the second one? Right above here. See? That's where they made the turn. Therefore, we just got to be higher than that. All right. So find out what that is. That's a 54. Let's move your stop to 57. Move both of them to 57 once this gets going. All right, take the bottom out, which is the commitment to continue through, and we will move the stop to 57. Then we don't move our stop again until we hit this line right down here. Yeah. You're funny. No, Malcolm, it's just fast email. It's went to your private email. If you don't have, Malcolm, send me an email so I make sure that they, a lot of times traders, what they do is they sign up under their Hotmail account and then they don't change it. And Hotmail is terrible or something like that. So send me an email to info@proacttraders.com and I'll check your email address. That way I have your email address, Malcolm. Only on the 10-minute chart in the first 2.5 hours of the session, James. And actually, most likely the first 2 hours. The 2.5 is pushing it. White dot on the 10. All right. So is that good to see? That's nice to see. All right. So we're pushing through. So far, it's a nice trade. All right. Remember, what was the key to this trade? We identified it before it moved. We went through all the currencies and we found this trade. Right? This is the one that was most eminent and had the greatest opportunity for a reward with the least amount of risk. That's what you do every day. What we did today is what you do every session. You go look for that opportunity. Where is that opportunity? So pushing through the bottom here, wait for the next thrust down and then move your stop. Wait till that candle breaks through that bottom right here, turns and goes to the bottom, and then we'll be good to move our stops. It'll go up 10 minutes afterwards, Dick, but I don't render these. Don't forget I don't render these. So. There you go. Pip's got it. There are really just 2 questions we have to answer throughout each day. What are they doing today and why? And once we get that figured out and ready to trade it, what's my risk? That's it. That's not rocket science. No rocket science here. Pushing, trying to push. Minimalist Forex Trading 101. All right, there's the push through. Move your stops. All right. Now, we can't lose. We cannot lose. There's not a possibility for us to lose at this point. Okay? As soon as it breaks through here, move the second one to break even. Get the first push down. You're only a few pips right now with risk on the second one. But once it pushes through, move the second one to break even. Well, move both of the stops to that break even spot, and just sit. Okay, Andrew. Well, you can see they're still committing to pushing it down through. You can see where the problem is, right here. But remember, if they want to keep this trend going, they've got to put a bottom in below here. They got to put lower lows in. That means they got to take this out. They're going to keep the trend going. So the push through here is pretty high probability. See that? Does that make sense to everybody? To keep the trend going, they got to push through and create a lower low. So that means that we can count on that S4 down there to be at least, it might not be the target, but it is where they're trying to get to. Come on, baby, push through that bottom. Sometimes you just got to talk to them. Come on, baby. The pad is at 93.32 from the white dot. White dot enter right there at the top of that wick. 93.32 is 55 pips. It's moved right there. Now, we couldn't get 55 pips of it, though, right? Because we had to take this bottom out here. But once we took the bottom out, there's our trade right there. And we're looking for that as the first stopping spot. So, and you can see, now they're at the bottom, and they're trying to push through. Just look over to the left, and you can see. They're at the bottom, and it's bright red, and they're still trying to push through. That means there's no reason to give up on this trade. Why would we want to give up on a trade that keeps going our way? See? And that's why you can't be watching multiple, one or two trades is about all you can really manage, folks. Maybe three. Once you get them up in good profit, maybe you can walk away and then start looking for another one. But they all got to be break even, and you can put your 2% at risk again, and your 2% at risk again. So come on, baby, push through there. Let's go. They're trying to push it. Kind of nice to get a live trade in the room for a change, isn't it? Almost forgot what we were doing here for a while. So, for so long here, we had a dry spell where there was not a trade at all in the New York session. So it's really nice to have one for a change. Now, the good news is that most of you should realize that is actually, it's great learning. But it should tell you that there aren't trades every day, right? Especially in there. All the yens are running down. We'd love to trade that the yen cross, but we can't get into it yet. Not yet. Is that Aussie yen? It's pushing to the downside. Don't forget now. We don't know what this Aussie is doing, so if it comes down and breaks out down through here, then we'll adjust the trend and include it. And then breakout down here will give us this opportunity here, right there, and then this one right here. See, once you know what the currencies are trying to do, then you can go find your opportunities in them. That might be KW. Yeah. Might cut it down a little bit. Okay, there we push through now. See. All right, so when we hit that 33, which is only 33 pips away, now we got to push everything into profit, because remember, that's the 55 pip where they're gonna bounce. All right, so they ought to bounce right here down here on the 33. We're at 37. When they hit the 37, I would stick my stop right above the 39 right here. I'd go to 43 and sit on that thing, and maybe we'll push through. But if we don't, we've got all of this guaranteed in our pocket. So. He's trying to go. All right, so Everybody knows why this trade worked. Pretty simple.
Wide open spaces. Wide open spaces.
43, Miguel. Going to 43, because remember, this is where they're going to take 50% of their money off, which will create a bounce. We hope it's a little bounce, and then they continue. Thank you, Dick. There you go. 43 within one more pip, and you go to 43. I had 3 positions on, so I had to move all the stops. Yeah, see, that's what happens, Dick, is we go, oh my gosh, look at the reward I could have had. Instead of realizing, okay, this is my learning experience for today. I made a little money, all right, but I had a learning experience today that I can't duplicate this learning experience. Yeah, can't duplicate it. So I made money. Actually, I'm earning while I'm learning, and that's a great thing. All right. So, see, they're having trouble here. So 43 may not make it all the way, and it may bounce. It's okay. Yeah, money's good, but remember, we've got to look at this in the bigger picture. The bigger picture is the more I learn, the easier it's going to be to trade, the quicker I can trade for a living. If it only has 5 pips to go, it's going to stop us out. But what does it do? It stops us out with guaranteed profit on 2 lots right here. See? All right. And we're anticipating they'll push it on down through. All right. And if they push it down and continue down and do the bottom of the channel, even better. All right. Then we'll move our stop again. Once we get down to that channel, all right, you can see what happens when they hit the bottom of the channel. They can rocket straight back up. So when they get down to the bottom of the channel, we got to have our stop down probably right above the 93.27 right in here. We'll move our stop here. And if it bounces back and does that, we'll be real glad we moved our stop. If it doesn't and it keeps going, we'll be really glad we moved our stop and stayed in. See? All this is decisions. As the currency keeps talking to you, you have to continuously make decisions based on the new information coming in. All right? Notice we're not trading a stupid indicator. Who cares what the RVI is? Who cares what the RSI is? Who cares what the slow stochastic is? All that stuff lagging indicators. We're trading price action, and we're trading the 240 and the 60 chart. That's how we figured this thing out. All our stuff now is just entry and managing. That's it. So come on, baby. Push on through. Fun, 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 fun. Yesterday's trade, we didn't get to manage it because we closed the room down. It happened too late. This one's great. It happened in session early enough so we can do the management. So we learned a lot today. For those of you who are brand new traders, you should have learned a whole lot today. All right? But remember, our purpose here is not to be a trading room. Our purpose is to be a training room. But a live trade gives us the opportunity to really train on how to manage that trade to its destination. All right? Yeah, I think I may just go ahead and do that, Barbara. You're right. I'll cut it down. All right, we're waiting to push through. Come on, baby. Make this a gold recording. And for those of you who come from another system, or you were a scalper or something, you see why it's worthwhile waiting for a trade like this to happen. All right, instead of trying to make 10, 12 trades that 6 of them may go and you get 5 pips, and 7 of them may not go and you lose 30. Yeah, there you go. It's better to wait for the one trade and then find a place, do it in a place where you can double your position. There you go, Hugh. Mama needs a new pair of shoes. And see, then when you come like Michael Anthony and John Robert and Pip and those people who trade bigger lots, they actually are making pretty good money this morning, see? But they didn't try to do that in the beginning. In the beginning, they trade micros to learn how to do it so that your lessons are $3 instead of $300. All right? If you take a loss, it's going to be a lesson one way or the other. So it can either be $3, $30, or $300. All right? Based on trading three units. Right? So you want it to be a $3 lesson. Stopped out at 38 pips. I'm not stopped out. I'm waiting for 40. I got to stop move to 43. Oh, because you're because of the spread on your broker, Larry. That's the other thing. You got fractional pricing you got to deal with, all that kind of stuff. Nasty. Fortunately, I don't have one of those accounts. I got an old account because I've had it for years and years and years, and I have a rounded account. So it means I don't get as good at entry as you guys do, but I don't have to deal with fractional either. So and they're having trouble here, you know. There you go, Hugh. Yeah, keep it reasonable. Keep it reasonable and attainable, realistic. All right. All right. There's still no buyers coming in. Okay, but what do we know about this? All right? Yeah. Oh, yeah. That's true. That's unsustainable, right? Always remember, our trades are going to be unsustainable trades inside a wide open space. That's our trades. Are always unsustainable. That's why we have to manage a trade and have to know how to move our stops. There you go, Hugh. And that's how you grow your margin, right? And then when you start trading 2% of your account, and you're trading 2%, as the account grows, that 2% becomes greater and greater and greater and greater. Right? So now they've kept the trend intact because they put. You still have rounded? Okay, good, Robin. It says they put in a lower low. See, now if they pop up here and now they go and square everything up. We got all of it we could get, see? And it ends up being a great trade. And you doubled your position. You did everything you were supposed to do, all right? You found a trade, waited for the break hook and go. When it started to go, you moved your stop. You got to break even. You broke a major barrier, you doubled your position. See? That's how you do it, all right? It doesn't change. The real estate changes every day, but the process doesn't change at all. And we're still hanging here. So a lot of people go, man, I'm really happy with this. I'm really happy. I just want to put this in the bank so I make sure I got a winning trade today. So you put the money in the bank by moving your stop. That's how you put the money in the bank, because you don't want to lose this opportunity to the downside. There's still 60 pips down the downside. Yeah, doubling's not so scary, especially when your first one's at break even, right? Pop it up here, see, and that's our danger, and we knew that. We knew that way ahead of time. If they pop up much further, they're going to pop us out, and that'll be it. There you go, Larry. Okay. Notice they tagged that line to the pip. To the pip, they tagged that line. I just got stopped out. All right, end up being a good trade. All right. Yeah, there you go, William. Now, we still got to look for this is the next opportunity. This was trade one. Remember that? This is only trade one. Trade one is here. Trade two is down here. See? It could, sure. Break, hook, and go. Right down in here. Could easily do that. But we executed correctly. We protected our win. We were in play in case it broke. We understood why they may bounce here. We already figured that out ahead of time. We knew they might bounce here because that's 55 pips from that white dot. That's why we tell you that when you see the white dot show up, they're going to go 55 pips. Okay, the 55 pips from the first dot has happened. The 55 pips from the second dot has not happened yet. So that's still viable, right? So we'll put a 55 pip target for that right there and see if we go again. All right. Oh, went the wrong way. Need to be a seller. All right, 55 pips is at 93. We're at 39. 40 more pips down to here. Right? And that's not the target. The target is down here at the 618 right here. If you're not in the room, oh, you'd probably be up in here somewhere, William. You don't want to be in a hurry. Remember, you got to look at the whole trade, not the first part of it. That's just part one. So you'd be up here, right in here, sitting here. So they pull up, go down, go again, and you're still in the trade. See? Okay, thank you, William. Yeah, it's just not there yet. So the spread on your broker is 5.2. Okay, good. Spread on me is I have 7 pips on mine. All right. FXCM's 2.8, 3.9. That's fractional. Yeah. I pay 7 pips. But see, I don't care about the fact that my spreads are higher because I'm only going to trade in big areas. I also don't have to worry about when I get close to my thing that they're going to pop me at a 0.09. You know? I'm still, in the long run, I make more money because I stay in more trades. Yo, Chief.